I first came across Philip Green as retail correspondent on the Sunday Times, and he struck me as an intriguing character. In some ways a bully and a real thug. In other ways he could turn on the charm and be quite helpful and witty and make you laugh with one-liners, market traders' wit. And that led to the BHS story where I investigated his £1 sale of the dying department store chain, which allowed him to pass it to a charlatan buyer and offload the pension fund in the process. And that was an immensely rewarding story to investigate as a newspaper reporter. It had real depth and complexity and different characters, and I went all around the country meeting people involved to expose what had gone on and show that the person who'd bought it, Dominic Chappelle, was not a fit owner of a big retail company. And that led to a lot of fights with Philip Green and the real drama and back and forth. And Sunday after Sunday, I have really great front page splashes and investigations and all the stuff that we love in newspapers. So I reflected and thought there's more there. There's a story there with the depth and the richness of a book. And it drew me into his world, and the more I looked into his past, the more fascinated I was. The way he'd emerged from the 1950s when he was born, been to a fairly privileged education at a very expensive public school, and then roughed himself up and reverse gentrified himself and gone into the rag trade and worked his way up through the 80s, the first boom era, experienced humiliation in the early 90s, being pushed out of a listed company, and then built himself back up aggressively with a series of deals, taking over Sears, bidding for Marks & Spencer, buying BHS, buying Arcadia, Topshop's parent company. And along the way, I saw how he'd morphed his personality, how he'd fallen in love with celebrity, started to see himself as someone who was rubbing shoulders with Kate Moss and editors of Vogue. And the whole story for me had a real completeness. There was several different worlds, so many different themes, and ultimately he's a vehicle for looking at the way society has viewed business over the years. And in the go-go years of the early noughties and the mid-noughties, people applauded as he made loads of money, went offshore, avoided tax, behaved obnoxiously. And he was really reflecting back the values of Britain at the time. Easy money, get rich quick. And post-crisis in 2008, I think the way we view business leaders has changed, and he failed to read that changing mood. And part of the fascination of the BHS story and seeing the way readers reacted to our Sunday Times stories, and then the way people have viewed the book and all the subsequent revelations that have come out about his behaviour towards staff, it's a real reminder of how the mood can change and how someone can go wrong when they fail to read that. And for me, the whole journey was fascinating, and I thought it deserved a book. I think you're always going to get an element of short-termism and predation in business because it's the nature of capitalism and free markets. There will be certain people who try and build companies for the long term, which grow and generate profits slower over decades and centuries. And then you'll get people who are hungry to make quick money, and they will come and go with the cycles to a degree. Philip Green really came to prominence in the late 90s, early noughties, when cheap debt was freely available. Banks were there to set up and advise and fund racy takeovers. The stock market was wide open for bids for retail companies which had big property portfolios which could then be sold off and generate cash quite quickly. I think people like Green will come and go to a degree with the ebbs and flows of the economy. When times are good and frothy and there's free money around, they'll be there taking things over. In harder times, it's more difficult for them, and then the ones who grow businesses slower and are more patient come to the fore. I don't think Brexit's going to have a huge impact on morality either way, but where it might have an impact on business behaviour is whatever happens and whichever way you see Brexit working out long term, we're going to have a period of 2, 3, maybe 4 or 5 years where things are very tough, where consumer sentiment fades, where spending gets reined in, and you have a downturn, maybe even a recession for a few years. And in those kind of times when the tide goes out, people tend to focus on behaviour more. So for the last 10 years post the financial crisis, we've had quantitative easing, which is money printing by central banks, which has reflated economies around the world. We've actually had quite a boom time in stock markets, and for those who already had money, things have been okay. For people without money, it's been less good, and the divide between the wealthy and the poor has widened. And I think actually in the last 10 years, you've seen a bit of a return to the 2007 behaviour, which Green surfed off. And I think if you have a downturn with Brexit and you have people reining in spending and you have companies finding it less easy to make money, actually will have more focus on morality and behaviour in business again. And some of the excesses you see in the boom times will be analysed and scrutinised, and the public and the media and society in general will start to ask a few more hard questions. So maybe Brexit could be a trigger for a period of reflection. It's hard to pick out a single company bucking the trend for big bad consumerism, partly because they tend to be smaller. I think if you look at the worst behaviour in business, it tends to be the Enrons, the Sports Directs, the Tesco's, the Barclays, the really big companies that get out of control and where an individual runs it as a fiefdom for themselves. There's a whole raft of younger companies coming through doing things in different ways, and just to pick out one, Monzo is a different kind of bank, I think, which genuinely believes in doing good as well as providing services for customers and disrupting the way banking is done and doing it in a much more human, sort of thoughtful way. And there's a whole raft of younger startups, 2, 3, 4 people, 50 people, 100 people, coming up in all different areas of consumer industry and technology, and they're going to slowly change things over time. I feel like consumer trust in big business ebbs and flows as cycles move and change. It's probably at quite a low right now given the scandals of the last few years. I mean, Carillion going bust, BHS going bust, employment practices at Sports Direct coming under scrutiny. I do think big business is having a moment where it's thinking about what it can do. And that's across a huge range of areas, from banks to auditors to retailers to tech companies. Facebook, Instagram, all those kind of social media companies also having a bit of an existential crisis. It has to be real. Whatever they do, it has to be genuine. It can't be window dressing. And that takes quite a big shift in mindset. And I think some of this wave of disruption we're seeing coming through with smaller companies shaking up the big, and companies like Uber growing to a huge size quite quickly, you're going to see people forced to think about how they behave, because this younger wave of disruptors will come through, get big very, very quickly as venture capital money piles in behind the winners. And that could be a force for change. Philip Green's problems with Arcadia and Topshop are symptomatic of the broader chill going through the high street, and he's typical of the mid-market players which have lost their differentiation. There's no real reason to go there anymore. The internet has undermined that business model, because now you can find specifically what you want very, very quickly at the lowest possible price. You no longer need to spend an afternoon traipsing around a shopping centre looking at loads of Me Too offerings to find things that are ultimately quite similar. And he has too many properties, the staff costs are very high, business rates are very high. And I think a load of these companies in the middle market are going to either go bust or be restructured very brutally. So House of Fraser's gone, Debenhams will go through some kind of restructuring, Arcadia will be another one, and there'll be loads more. I don't think it's completely doom and gloom, because the last 20, 30 years we've seen chains open so many stores. There are far too many stores for the amount of consumer demand now. We'll see a load of stores close. It'll be a very painful period. Lots of jobs will be lost. Pension funds will be cut loose and bailed out by the Pension Protection Fund. But when we've been through that period of painful readjustment, I think something will emerge that will be viable. Will boil down to a retail on a high street that's a lot smaller than it is today. And you'll see a lot of stores become blocks of flats or theatres or cafes or whatever else. And you will emerge with a much smaller retail industry, but one which is fit for purpose and which is based on lower rents, has lower overheads, has an element of online, and that will be a sustainable base to grow from.